Is buying a house the best investment of your life? Half a century ago, a house in a Canadian metropolis cost very little. Today, it is worth a fortune. But the truth is counterintuitive. The real return on housing after inflation was only 2% per year. Meanwhile, the global stock market yielded double that. Data from Vanguard and global indices show that the opportunity cost is high. Keeping money stuck in a wall is expensive. Maintenance consumes nearly 1% of the property's value every year based on standard real estate cost estimates. Renovations? Nearly 3%. If you had invested the difference between rent and mortgage in an index fund for 50 years, you might look back at retirement and realize you quietly built a second house inside your brokerage account based on historical S&P 500 return data. The dream of home ownership can be a mathematical nightmare, especially if you consider taxes and constant repairs. The implicit cost of an average apartment in Canada today exceeds $2,000 a month. Average rent in the same region is practically the same amount. In other words, you pay for the privilege of doing the work of an owner, and you lose the chance to see your money multiply in the stock market. The math doesn't add up for those seeking pure profitability. It is a lifestyle choice, not a maximum profit strategy. Inflation over the period was nearly 4% per year. What remains as real gain is very little for the risk involved. About 75% of people still prefer to buy for security, but the numbers tell a story of lost profit. Being free to invest can be worth millions in the long run. Millions that stay buried in foundations and roofs. Think twice before signing a 3-decade mortgage. When I first ran the numbers on a spreadsheet, I expected romance. What I found was arithmetic. Math is cold, and it usually favors those who invest with liquid intelligence. Reach the golden years and sell everything to live as a renter? To many, this sounds like madness. But for new multimillionaires, it is the secret to freedom. Imagine living in the heart of Silicon Valley without millions in debt. A luxury property costs more than $2 million today. The monthly mortgage would reach over $11,000. Rent for the same property? Less than half of that. Data from the New York Times shows brutal savings. In less than a decade, you save nearly $1 million by renting. For those already retired, flexibility is the greatest asset. You can move closer to family in just a few days. There is no worry about a broken roof or the garden. Specialists suggest the golden rule of planning. Spend less than 30% of your gross income on housing. Owning a home brings predictability, it's true, but it also brings immobility and the risk of depreciation. Remember the global financial crisis from 2 decades ago? In 2008, some homeowners opened their online banking apps and discovered their house had lost the value of an entire college education. Properties dropped nearly 40% in market value, according to S&P Case-Shiller Home Price Index data. For a senior, waiting for the market to recover might not be an option. Renting allows your capital to remain invested and growing. Investment income pays the rent with money left over. It's about trading the pride of ownership for quality of life. Having full accessibility in a modern condo, without stairs that become obstacles over time. Renting is an excellent plan for the short and medium term, but beware, prices go up at the beginning of every year. Long-term stability still favors a paid-off property, but for those who want to live for today, the rent check is the key. Free your capital and enjoy the world. I've met retirees who own beautiful homes but can't travel because every repair feels like a small financial ambush. The house should serve you, not the other way around. How to build a real estate empire starting from zero. In the middle of 2026, you don't need a fortune to start. The secret lies in using other people's money. Major managers and the Fed itself operate based on credit. You can acquire an entire building without investing a cent of your own. The focus must be one thing: positive cash flow. If the rent pays the debt and there's a surplus, you have a business. Even if only $50 are left over per month at the start. Market knowledge is your most valuable asset. There are government programs for first-time buyers. Some allow for minimal or even non-existent down payments. Another technique is direct seller financing. Many owners prefer receiving monthly payments rather than a lump sum. You assume the existing debt and keep the low interest rates from years ago. This is what they call stepping into the shoes of the original debtor. In the commercial sector, values are dropping in several regions. Offices and shops are cheaper than ever. This is the opportunity for those who know how to negotiate terms. You can even sell the contract before even closing the purchase. This generates quick profit for your next step. If you don't put in your own money, the return is infinite by standard ROI calculation methods. But beware, property management is not free. On paper, a deal with zero money down shows an infinite return. In real life, it shows sleepless nights, tenants who call at 2 a.m., and a bank that never forgets your name. A good property manager is essential for your peace of mind. The property needs to have potential for future appreciation. Don't buy just for the price, buy for the potential. Analyze 10 deals to close one. Real estate is a game of patience and numbers. Use leverage with extreme responsibility. The risk of losing money is real if the math is done wrong. Master credit, and you will master the market. Is living in a van or trailer the path to maximum savings? The nomadic lifestyle looks cheap on social media, but the financial reality can be a thermal shock. A couple I know tested life on the road for 6 months before the middle of the year. The monthly cost for a couple is more than $3,000. Yes, this can be more expensive than renting an apartment. Fuel consumes almost $1,000 a month. Filling the tank in the U.S. costs about $200. Food is another logistical challenge. Without space to stock up, trips to the grocery store are constant. They spent nearly $1,000 on food in a single month. And parking? It's not always free. Structured parks can cost $75 a night. Free options at department stores aren't always safe. Vehicle and health insurance are high fixed costs. Together they amount to almost $250 a month. And don't forget the maintenance of your mobile home. An unexpected awning repair can cost $1,000. Small problems become big expenses on the road. Propane for heating and cooking also adds to the bill. Freedom has a price, and it's paid in money and patience. Living frugally on the road requires iron discipline. In the end, savings compared to rent are minimal. In some cases, living in a small town is cheaper. Nomadic life is all about the experience, not about saving. If you're looking to escape the bills, the road might disappoint you. But if you want to wake up to a new view, the cost is worth it. Be prepared for financial surprises every week. A $3,000 budget is the minimum for comfort. The road is beautiful, but the real-world toll is high. The financial market moves fast, but those with the right strategy don't get left behind. Which of these topics would you like me to dive deeper into in the next video? Share your opinion below, and don't forget to turn on notifications so you don't miss our next roadmap to financial freedom.